Good afternoon and welcome to NYFB. On this Thursday afternoon, U.S. stocks are trading higher with the equity averages resuming their gains. Now joining me today is Ben Willis of Albert Fried & Company. Ben, good afternoon. Thanks for joining me today.
Thanks for having me.
Well, today it has been busy on the earnings calendar, the busiest day so far for the earnings season. We also got a decline in that jobless claims figure, which was more than expected. But overall, given that we saw weaker than expected global PMI manufacturing figures this week and the unemployment rate in Spain skyrocket, all of the global figures haven't been that positive. So what do you make of what we've seen so far this week?
I have no idea. Tell me why, of what we just said about the PMI and what's going on in Europe, why the bond yields are dropping in Spain and Italy. It's just another confusing fact in the overall picture of the market that I continue to wonder why. I don't think it's a bad time to buy equities. I just keep anticipating that they should get a little bit cheaper somewhere along the line. It's not happening. So today we had good news coming out of the idea that central banks are going to start buying equities. The U.S. data was positive. Most of the earnings were positive. Not necessarily on the revenue side, but positive nonetheless. So here we are, touching all-time highs again on the S&P, or at least somewhat close to it, and this bull market refuses to roll over and die. It's quite amazing.
And speaking of central banks, it does appear as though expectations about an ECB rate cut have been rising this week. And in addition to that, we do get figures out from the U.S. Tomorrow, which will be key for assessing the state of our economy here. We did see an improvement in UK GDP figures, but given that we've had a little bit of a technology headache this week given the AP tweet, and today it does appear as though some of the CBO trading has paused because of an outage. So given everything that's going on this week, what can we expect heading into the weekend?
Regardless of what's transpired, the market has managed to snap back. We had the tweet that took us down about 135, 140 points. We managed to come right back. The CBOE's effect right now is having an effect on volume. The volume, quite frankly, from trading equities is dismal. So this market continues to climb on virtually no volume. I mean, this is even slower today than we were yesterday. It's disheartening, since I make my money based on the commission dollars and number of shares I trade. The tape's not moving, so it's a little difficult to really understand. But the fact of the matter is, I think the broad global markets are in a recovery. I think they need to have some sort of reset along the way before we go higher. But the big picture is still bullish.
And I know that you've been keeping an eye on the latest earnings reports, as I have as well, and we've been getting a better idea of what companies are expecting going forward and how they performed in the latest quarter. Have there been any surprises?
Well, I think the big surprise for me out of anything was Apple. Their numbers were great. Yes, their margins were smaller, but they are doing all the right things that we never thought they'd do. They're spending the money that they have in overseas accounts by paying a dividend, or not by paying a dividend, by borrowing the money on a bond issue. So it's a way of moving that money from the overseas accounts to pay out the interest side. So yet the stock closed down on the day. It had a great spike overnight, if you will, if you were fortunate enough to be awake and trading it, and it did come in as I thought, but that's a pretty good indicator to me that I think this market's a little tired. When you have a bellwether like Apple that's led the market higher, do all the right things from a business management point of view, and still not be up on the day, that tells you a lot.
And Ben, last but not least, before we wrap it up for today's interview, you mentioned bond yields. We talked about what we're seeing in the equity markets, and we will continue to monitor what happens in some of the foreign exchange markets. Right now, we are seeing the dollar-yen trade at the 99.40 level. Of course, we get the Bank of Japan rate decision as well as the statement out from that central bank overnight. And this will be the first meeting since the stimulus measures were announced from the central banks. Do you think we could see a tick higher in the dollar-yen pair heading into tomorrow?
I'm not a real expert on currencies, quite frankly, but yes, I would expect it. I think the most interesting times we live in right now as a measure is the battle of devaluation of your currencies. And I think historically we'll look back on this and just wonder. And quite frankly, the United States started it, and it's just managed to move away around the world, and you've had some people rattle cages of how wrong it is, but yet Japan is probably the most stark image that we can see. If they were the equivalent of what happened in the U.S., we would really look like mongers as far as our currency is concerned. But that seems to be the only way for the world economies to grow themselves out is by deflating trying to inflate the rest of their economy while deflating their currency. So it's an interesting play that I don't think that the last chapter is written, but it's worth keeping an eye on.
And it does appear as though a lot of companies that have reported so far, especially the multinationals, are referring to the fluctuations in currencies.
Right.
So it is important to keep our eyes on. So thank you so much for joining me, Ben, and as always, thanks for your insight.
Pleasure to be here. Thank you.